Welcome to Naples Money Managers Updates and Portfolio Commentary. I'm John Kincaid. It's Monday, June 1st, 2020. So let's get after it. I'm here with my colleagues Marcus Bickle and Dennis Nelson. Two things I found just to give you an overview of some of the things that are being discovered in the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act. A couple of things that I found that were interesting, one possibly more than the other. First of all, cash contributions or donations to certain charities have changed with the CARES Act in 2020. It used to be that you could contribute and deduct up to 60% of your AGI, and that your adjusted gross income. And now that has been changed to 100% of your adjusted gross income. And if you go beyond that in a cash contribution, not stocks, but in a cash contribution, that can be carried forward to the following year. For those who do not itemize, there's a built-in $300 deduction already above line for those that do not itemize. The second thing that I saw that might be useful to maybe friends or family is that if you're under 59 and a half and you take a distribution from your retirement plan for the coronavirus in regards to healthcare, you can take that without the 10% usual penalty, and the taxation on it are based over 3 tax years. Just wanted you to know. Next, we'll have Marcus with some portfolio commentary.
Hello everyone. I hope everyone had a wonderful weekend and was safe out there. It is Monday. So for the last couple of weeks we've been talking about recent positions we put on, some of them being Goldman Sachs, Good Bank, or Progressive Insurance. Now we purchased those towards the beginning of last week or the previous week. It was a really good buy point too, because as I'm sure many of you are aware of, we had a really good week in the market last week. In fact, we broke 25,000, which is a pretty key kind of resistance level that a lot of us watch. Now, as the market went up, that let us do what we do here, which is write calls. We wrote 1-month call options on the 3 positions I mentioned, which are Goldman Sachs, Progressive, and Twitter. We wrote a 1-month, slightly out of the money, which means we're giving them the right to take it away from us if it reaches that price. And we got 2 to 3% premium for that contract. It also lets us lock in all the gains we got from the previous week. This kind of shows the flexibility of our strategy, that whatever the market's doing, we have a way to pivot. It's going down, we can sell in the money or close to the money, get a little bit more of that premium. As the market looks like it wants to go back up, we sell a little bit further out. It's really a flexible strategy and something we're really excited about. And incidentally, as Dawn would say, unfortunately she's not here, our race to zero, getting us all back for that downturn we had, is going really well. Well, I hope you all have a wonderful day, and I'm going to turn it over to Dennis Nelson.
Thank you, Marcus. Well, we're off to a new week. This is Monday, June 1st, as John said. I'm looking back at the market over the last couple of weeks, and the Dow Jones over the last 2 weeks was up 7%. Now that's a good week, but something else really happened during that period of time. At the beginning of that 2-week period, the nature of the market really changed. It changed from the growth stocks. We've seen the Amazons of the world, the Apples of the world, Facebooks, etc. Have been really the force behind the rally in this market. Well, that changed 2 weeks ago, and at that time, what was being bought and heavily bought were the depressed value stocks. So, for instance, Delta Airlines in the last 2 weeks up 31%. Carnival Cruise Line, can you imagine a more depressed stock than that? Was up 23% in the last 2 weeks. The real estate investment trust average as a whole was up 12%. I can go on. Hyatt Hotels up 17% for 2 weeks, and even JP Morgan was up 12%. So what was happening, I suspect, and I haven't been able to confirm, but I believe this to be the case, that there was heavily short covering. Now what that is when you short a stock, what you do is you sell a stock you don't own. And when you want to, with the idea that you're gonna buy it back at a lower price and make the difference. Well, when the market turns against you and you're short the market, you wanna get out and you produce what they call is a short covering rally. Those rallies can be really strong, and I feel that this is what happened over the last couple of weeks. So there's some news. We will be heading for a new week. Looks like the market's kind of quiet this week to start with, at least today. And we will go forward, and I hope everybody has a great week.
And I just wanted to finish out and do Don's part to say money matters, but at the end of the day, you matter. Have a wonderful week, and we will talk to you soon. Thank you.